All right, let's cut right to it. We're talking pure speed, pure precision. We're going to build the exact filter the pros use to find the perfect stock to scalp and cut through all that market noise.
I mean, think about it. Thousands of stocks are flashing green and red every single second. How in the world did they find the one that's actually worth their time and do it instantly? Well, here's the secret. It's not about guessing. It's not about luck. They use a strict mechanical filter that tells them exactly where to look. And today, we're going to tear that filter down, piece by piece.
First up, let's talk about gauging true liquidity. This is the entry gate. And trust me, if a stock can't pass this first test, nothing else you look at even matters.
It all kicks off with the bid-ask spread. You can think of this as the price you pay just to enter the game. It's that little gap between what someone's willing to buy for and what someone else is willing to sell for. For a scalper, that gap has to be razor thin.
So here's rule number 1, and it's non-negotiable. The spread has to be 2 cents or less. That's it. That's your entry ticket. If it's any wider, you're already behind before you even start. You just move on.
And why do we care so much? Because a tight spread means less friction. It's like the difference between sprinting on a paved track versus running through mud. The less friction there is, the faster you get into the green.
Okay, next on the liquidity checklist, average daily volume, or ADV. This is basically your gauge for how many people are in the pool. It tells you just how many shares are changing hands on any given day.
And the magic number? We need to see over 20 million shares traded daily on average, no exceptions. At this level, you know you can get in and out of your trade without your own order pushing the price around.
And this is all about avoiding slippage. High volume is basically your insurance policy. It means that when you hit that buy button, you get the price you see. No nasty surprises. Just clean, reliable execution. All right, so liquidity is confirmed. The stock passes the first gate. Now, our job is to find out where the action is happening right now, today. It's time to find the momentum wave. And the tool for that is relative volume, or RVOL. Now, this is different. This isn't about the average. This is about what's happening today compared to the average. It's our #1 signal that fresh money is pouring into a stock. Take a look at this. An RVOL over 2 means the stock is officially in play. It's on our radar. But that sweet spot, the optimal zone where the momentum is most predictable, that's right here, between 3 and 5. That's where we want to live.
And this is exactly why it's a game changer. High RVOL is what separates a stock that's just kind of drifting sideways from a stock that's making a real powerful move. It tells you there's conviction behind the price action.
So what's causing all this excitement? There's always a reason, a catalyst. Maybe it's a huge earnings report, some big news hitting the wires, a major technical breakout, or even unusual options activity. Bottom line, there has to be a reason for the crowd to show up to the party. Okay, so we've got liquidity and we've got momentum. Now it's time to pick the right arena. Not all stocks are created equal, and we need to be in the right one. So let's talk about float. See, low float stocks, they're like dynamite. They can be explosive, sure, but they're also super unpredictable. For professional scalping, we stay away from that chaos. We want to be in the high float stocks, where big institutions provide stability and a predictable order book.
And that leads us right to the core tickers. We're talking the mega cap, household names. Think NVDA, TSLA, AAPL. These are the stocks with the biggest funds in the world are playing, which means they have the deepest, most reliable liquidity day in and day out.
And finally, timing is everything. Look, liquidity isn't the same all day. You have 2 massive windows of opportunity, that explosive open right at 9:30 a.m. and the powerful final hour push into the 4 p.m. close. That midday quiet time, that's when you sit on your hands and wait for the A-plus setups.
All right, let's put it all together. This is the final filter. This is the go/no-go checklist you run through every single time before you even think about putting a single dollar at risk. This is your pre-flight check. Is the spread under 2 cents? Check. ADV over 20 million? Check. RVOL is over 2? Check. Does it have at least a 2% range to move in? Yep. Is it a large cap name? Yes. And finally, is there a clear catalyst driving the action? Check. If you've got all these, you're cleared for takeoff.
But here's the most important rule of all: discipline. If the stock fails 3 or more of these checks, you just skip it. Period. No second guessing. Because guess what? The market will be here tomorrow, and there's always another trade right around the corner. So you see, this whole checklist, it's not just a bunch of numbers. It's a framework for building a professional mindset. It's how you move beyond just guessing and start cultivating a real, repeatable edge.
And this is really how the pros win. They're not trading hundreds of different stocks. They focus on just a small handful, maybe 5 to 10 tickers, and they learn them inside and out, they master how they move, and through sheer repetition, they let that edge compound over time.
And that brings us to the most important takeaway of all. When you strip everything else away, all the indicators, all the strategies, it all comes down to this one simple truth. Just remember, liquidity is the only edge that matters. Everything else is just noise.